Femi, a fantastic day that came through for the NSE. We were down almost 3% on Friday, so we've given back some of those losses. We've seen a nice gain in today's session. We're up almost 4%. What drove trade today? I mean, great news on the euro bond front as well.
I think, Eleni, it's probably clear return to confidence in the Nigerian market. There was quite a bit of apprehension around some of the comments that came around on the Eurobond last week with a number of fund managers appearing seemingly negative on the outlook for the Nigerian market. But what we've seen right now is that there's very strong performance from the stock market. The main drivers obviously continue to remain the banking space. I think that the negative story, and if you recall, that's always been our position. The negative story around the banking sector has changed dramatically. The introduction of AMCON as well has changed the Nigerian story from a stock market point of view. So it looks all positive from here. However, I still continue to think that the risks for the market are on the downside, especially if you look at the results of some of the polls that you just talked about earlier. It shows that there are certain things that people need to be concerned about, and that is what will drive the market going forward.
Well, let's just touch on that poll and looking at the MPC rate decision. A big amount think that there is going to be a hike, around 45%, 44% say that it's going to stay on hold, and then 11% say that there's going to be a cut. So definitely a massive division as to where we could see interest rate going. You know, Femi, your personal view, where do you think this is all headed? Because it really all hinges on the inflation story as well.
Eleni, I wouldn't want to be in the MPC at this point in time. The reason being that, look, Nigeria has two very interesting problems, and that's what makes rate decisions perhaps a bit difficult. We're in a situation whereby there's a deep need for growth in the economy, which means that you need some level of benign interest rates environment. On the alternative, inflation continues to be a challenge, and I share the views that we will definitely at some point this year see complete deregulation of the fuel price regime, which means that the pressures on inflation are going to get stronger. Whilst the output from an agricultural point of view last year seems to have been very positive, and we're expecting that if the rains are good this year, we should see prices moderate significantly. But the risks of imported inflation are very real. Yeah. Bread prices, for example, are up between 10 and 15% in the last month, and we expect that those pressures will continue. So when you think about it, at the end of the day, the MPC is faced with a decision of deciding whether they want to continue to look at inflation as the main target or they want to focus on growth. Now, if they want to focus on inflation, then the argument is that the current interest rate regime is perhaps one that is somewhat inflationary. However, if growth is the story, and which is what we believe that the central bank should be driving at, then you would imagine that they should keep rates at current levels.
Well, Femi, let's touch on the Eurobond, which was about 2.5 times oversubscribed. We're looking at a yield of around 7%. What do you think it says about, you know, investors having the appetite for Nigerian bonds going forward? Does it say a lot about the perceptions of the economy?
It says a lot. I mean, it gives you a clear perspective as to how international investors look at Nigeria. It's a bit worrying, and not necessarily worrying. I think there are two things that we can take out of this Nigerian Eurobond showing. First, there's a lot of capital out there that's looking for yield. Secondly, it shows that Nigeria is still trading way above other African countries in terms of a risk perspective, and that is negative. The Nigerian paper price at about 7% means that yield is actually higher than some of the other smallest West African and other African countries. But the major thing to take out of that is that, look, there is appetite for Nigerian paper. It is an opportunity for the Nigerian government and the people who run the economy to do the right things for a while. You know, we say that, look, if Nigeria can fix its problems, if we stop spending like there's no tomorrow and bring in some form of fiscal discipline into the structure of the economy, then we should start seeing the Nigerian economy post, you know, really sustainable growth numbers. And then we can start to manage all the exogenous factors that we keep citing when it comes to both inflation, the exchange rate, and all of that.